All right, folks, we are back here on the Wall Street Shuffle, 214-787-1190, 817-787-1190. We've got Gerald Celente holding on the line on the Dallas Gold and Silver hotline. We wanted to take one call real quick because I think, William, your call represents a lot of the callers we have on the line right now that we're not going to be able to get to because of Gerald. William, first of all, welcome to the show. Great to have you, my friend, and ask your question.
Thanks, guys. I love the show. My main question would be, what would be the best financial advice that I could do in order to soften the blow that's gonna come in the future?
And if I got the message right too, you're 31 years old, and you want us to kind of what things can you do right now, just in case some of the stuff we're saying is right.
That's exactly right.
Chris, you take a first shot at it. Let's take about just a minute because we've got Gerald on hold.
Okay.
And by the way, William, don't hang up. We want to get your name. We want to get a way to contact you because we'll come back and get you a more complete answer offline. So don't go. We're going to put you on hold here.
Oh, perfect.
All right.
Okay, well, William, the kind of things I'd be looking at right now, obviously without knowing your full situation, don't take everything I say as gospel right now, but the first thing I'd be doing is making sure my money is safe. Make sure you have emergency funds, which means let's not worry about getting too creative right now. Let's get a nice, good, fat bank account in a good, solid bank, FDIC insured, liquid. Don't be tying your money up in CDs. Look at everything you're spending money on to see, are you getting a fair price? Start cutting back on prices and saving cash.
Yeah, and let me also say this, William. I am not a Dave Ramsey fan. And I will tell you that Dave Ramsey's advice to some folks is good and some folks it's not. When he says pay off your debt, if you're going to use your last dime to pay off your last credit card, even though I'm in that business and I'd love it if you'd pay off your bill so I get to collect on it, I would tell you right now the idea is to preserve cash. And if I had to keep some credit card balances out there or some open lines of credit in order to have true cash available to me, I think one of the worst things you can do right now is to tell people to pay off their debts, because pretty soon the government's going to come back and say, we're going to negotiate with you and we're going to find a way to help write those debts down. And won't you feel silly if you took your last dime, hard-earned dime, to pay off your debt and everybody else is taking advantage of the government? So I'm going to tell you right now, and we'll talk to you offline to be more specific, but I would tell you right this very minute, don't go out and start paying off every one of your debts. Preserve as much cash as you can in the short term until we figure out where we're going.
Right, and that doesn't mean spend that money on other things. It means the money you were going to give the credit card company, hold on to as cash.
Don't spend it.
Right.
All right, William, stay with us. We're going to put you on hold. We'll come back to you right after the break, and we'll talk to you a little bit more. Gerald, it's great to have you on the air. We've got Gerald Celente on with us, and he's billed as the world's #1 trends forecaster. And I happen to subscribe to that philosophy. I think Gerald's work is outstanding. He writes a newsletter and has a forecasting center, worldwide forecasting since 1980, Trends Research Institute. And if you don't mind, we'll give you a little validator. And just from CNN Headline News, of which we are on CNN Headline News, that says, when CNN wants to know about the top trends, we ask Gerald Celente. I thought I'd throw that quote in there for you, Gerald, just to give you a little validation, brother.
Well, thank you.
And so now that there's 1,000 quotes in there that you tell the folks how many things that you've hit on target, and then I want to go into what you see coming in the short term and the long term.
Well, we've been at this since 1980, and we have a number of books out, Trends 2000, Trend Tracking. So everything that we say that we've done is in writing, and of course with our Trends Journal, our newsletter. And I guess the biggest things were the 1987 stock market crash, the demise of the Soviet Union, the 1997 Asian currency crisis, the last couple of recessions, and in November of 2007, we actually took out the domain name, the Panic of '08. That's how sure we were that things were going to unravel financially in '08. And now we're saying the collapse of '09, that's going to be leading to, unfortunately, the greatest depression.
All right, now, the one thing that people would say about our show, and they would be wrong, they need to listen to us a little bit more before they say it. They would say that we are negative, we are pessimists, we give problems without solutions, and that is clearly not the answer. Everybody is responsible for their own lives. We're trying to help people find ways to deal with the problems we see coming, and we're optimistic that we can help people do that. So we are incredible optimists, but I think we all need to have a perspective on where we could be going. Admittedly, yours is a little extreme, but it's not outside the realm of possibility, and you've been right in the past. So give people a vision for what you see over 1 year, and then I dare say when you get to 2012, I would be shocked if people don't pull off the road when they hear this.
Well, yesterday, actually, the New York Times, an op-ed piece, they called what we put out pessimistic porn. And it's really quite childish in that, the ship has hit an iceberg and it's sinking. And you could have all the hope, confidence, and optimism you want, but if you don't take proactive measures and just think, hey, everything's going to be okay, Washington's going to save the day, well, knock yourself out, because you're going to be in deep trouble. And because all we do is we look at the facts. We're political atheists, by the way. We don't believe in political parties and, as religions, nor do we, bow to political gods. So we just look for facts as what they are, not the way we want them to be. So as we're talking about the collapse of '09, let's look at some facts. I mean, we're saying is that the next shoe to fall is going to be in the commercial real estate sector. And if you want to talk about a leveraged sector compared to, say, the subprime problem, it way outweighs it, 100 to 1.
Sure.
These malls and office towers and huge developments, they're put up with virtually no money down. And you want to talk about leverage. You look at all these leverage buyout groups that bought companies like Hilton, you name it, $20 billion here, $40 billion there. It's not like they put up the money themselves. This is all leveraged. So now what's going to happen, and you see it in retail sales, we saw this past Christmas, luxury off 35%, home electronics and home furnishings and electronics down 27%. Women's apparel, a huge leader, down 23%. The point being, who is going to, and then we saw all the bankruptcies last year, Circuit City, Steve & Barry's, KB Toys, Linens and Things, on and on. And now the point becomes, now you see all the store closings, who is going to rent all of this vacant retail space? Who's going to rent all of this vacant office space?
That's right.
The answer is no one. So now how are these people that have all this debt, that they have leverage, how are they going to pay their nut? They're not. And when you're looking at, for instance, worldwide, it's estimated that credit swap fault derivatives, of which who knows what they mean, there are $500 trillion worth floating around. So even as trillions that the Fed is printing, it's not going to solve the problem. And what people really need to realize, this is global. You're seeing the Ukraine, Lithuania, Latvia, Estonia, Romania, Hungary. They're out of the game. They're virtually bankrupt.
Well, and often and mostly finance, and believe it or not, everybody thinks the Swiss are so darn smart. The Swiss are in worse shape than we are because they're the ones that have bankrolled a lot of these emerging Eastern European countries.
That's exactly right, as well as Austria, Italy, Germany, Belgium, France. So everybody is into this thing. Look, again, current events form future trends. That's the way we forecast trends. We look at the events and see how they're going to play out. All of a sudden, like this, boom, last month, Russia talks about a new world reserve currency. A couple of weeks later comes out China, a new reserve currency. Now the UN is talking about it as though this is a natural flow of progression, that all of a sudden we are going to be subjected to a world currency.
Well, and you've got Geithner out there, for the love of God, man. Yesterday, he is the head of our treasury, and the Chinese premier comes out and says we need a basket of currencies because we don't trust you in the U.S. And the thing I would have thought, now admittedly I'm going a little over the top, I think the first thing you'd do is you'd float about 5 aircraft carriers out there and say, boys, I don't think so. And clearly I'm a little off the radar, off the reservation when I say that. But what they would have at least done is to fight back. Geithner goes, that's not such a bad idea. We'll think about it.
Because there's no way out. There's no way out.
I want somebody to fight, though. I want somebody to fight for us.
But they've given it away already. First of all, as